The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 11th, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a terrific Tuesday, and I want you to know that I'm grateful for your presence here today. Now, our first course of action this morning, well, it's to make sure that we know our daily outcomes. Do you know your daily outcome? Like mine during the next 2 hours is to teach you how to master the tools for trading, and that includes the tools of the mind, because when we can master the tools of our mind, we begin to think like a strategist. And that's really important because most folks only concentrate on tactics. Doesn't matter whether it's trading, investing, whatever it is you're doing in your life, folks. You want to make sure you've got a strategy. So this morning, when it comes to trading and investing, you'll hear me use tactical terms like A to B equals CD, swing points, Gartley and butterfly patterns, as well as various candlestick signals that the sign makers of the markets, the bulls and the bears, form for us on every time frame chart that we trade. Now, knowing how to use these tactical tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. And let's make sure that we don't conclude that failure and losing money is the same thing, because it's not. You see, in trading and investing, our spoilage is money. Just as running a household means throwing out food that's gone bad in your refrigerator. And here's the key. In trading and investing, as long as we use stops, as long as we have an exit strategy that covers both sides of the trade, which means we use a bracketed OC order, then the loss of money is nothing more than spoilage resulting from a failed trade pattern. And that's a part of any trading strategy. It's what's called system expectancy, that's really our ultimate performance tool out there. So today and every day, let's do what we can to think like a strategist, because strategists will slay the tactician all day long. So let's go look at one of our tools that helps us think like a strategist, the tool I call ending procrastination. Now, perseverance is about as important as gasoline is to driving a car. Yes, there'll be times when we feel like we're spinning our wheels, but what I've found is that we always get out of that rut with genuine perseverance. Without it, we won't even be able to start our engines. And the opposite of perseverance is what? It's procrastination. So where perseverance means we never quit, procrastination usually means we never get started. Or if we do start something, we never finish it. Question, what do you think is the main cause of procrastination? Think back in your life. Anything that you might have procrastinated about. What do you think is the main cause? It starts with the letter P, and it's the lowest standard that we can set for ourselves. Yes, it's called perfection. That's right, perfection. Perfection, which means that everything has to be just right before a procrastinator can start their task. Look, we've all been procrastinators from time to time. And if you go back and you really take a look at it, it was really all about perfection, the lowest standard on earth. Because the question is, when will everything really be just right? This isn't the story about the three little bears out here. When will everything be just right? Exactly. Never. So don't strive for perfection. Instead, just strive to be outstanding. Strive to be extraordinary. These are two standards worth achieving, and these are two standards that will get you out of any rut that you might be in life. Maybe you're not there now, but at some point in time, you're likely to find yourself in that rut. Change your standards, folks. Change them from perfection to outstanding, and you will change your life. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's go see what the markets are doing out here right now. We've got selling pressure. Bears in control, or the sellers are in control. You've got the Dow futures off 59 points. They're trading out at 16,883. S&P futures off 8 points. Still over 8 points, trading at 1942 and a quarter. NASDAQ futures down 16, trading at 37.84. Russell 2000 off about 8, trading at 11.64 and change. King dollar back 100 ticks, down 10 cents, trading out at $80.74. Goldilocks, not on fire this morning. That's up $3, trade at $12.63. Silver up 8 pennies, trade at $19.25. Light sweet crude is flat right now, trading out at $104.35. Let's go see what's going on around the globe out here. Over in Germany, the DAX is down about 0.9%. It's off 87 points. The FTSE is down 37 points. That's off about a 0.5%. Nikkei was up 0.5% last night, up 75 points. Hang Seng down 0.25%, off 58, and the Shanghai basically unchanged, up 2. Our call-in number is 877-927-6648. Of course, you want to know, is this a buying opportunity or a selling opportunity? That's a great question. Let's go take a look at, I've got this tool. If you're watching us on TigerTV, and I hope that you are, if you're listening on the radio or your mobile device at TFNN.mobi, we absolutely appreciate that. The archive of this show is on Channel 10. If you're on your smartphone device and you've got you're near an internet connection, Wi-Fi hotspot or something like that, you don't even have to be near a hotspot location. Just go to the homepage of TFNN.com. Upper right-hand side, you'll see a little button, 3 little smartphones. Click on that. The show will stream live to you, and you'll be able to take a look at our charts out here. You'll be looking at, in the upper left-hand corner, a 120-minute chart. This happens to be for the Dow. We're looking at the Dow futures right now. Upper right-hand side, 240-minute chart, a 4-hour time frame. Lower left is the daily chart. Lower right is the weekly chart. So it gives us, because the question is buying or selling opportunity. Now, don't you really have to first answer the question, well, what's the time frame that you're trading on? I think the answer is yes. And then if you are trading on a time frame and you're looking for support or resistance, don't you want to know what's going on? A step above, a level above you as well as a level below you? I know I would if I was flying your plane for you. So let's take a look at the 120-minute chart. 120-minute chart, this using the market profiles. We're going to take a look at retracements. We'll take a look at market profiles out here, areas that help us to identify levels of support and resistance. If we take first up low, we'll look at the market profile. The unfair low, that's also referred to as a support line, 16,824. You're trading at 16,810. Price close below that here, coming into the 6 a.m. time frame out here. 6 to 8 time frame, and the question is going to be, is 16,824 going to act as resistance? Remember, changes in trend are going to happen on shorter term time frames before it gets to longer term time frames, right? So key level to be watching today, no matter what time frame you trade, is what happens at the 16,824-ish level. If that acts as resistance, that'll make you say, something to think about. If we take a look at retracements, so let's do this. Let me see how far back do we want to take this. Let's take this really to where I think this is June 5th. This might be the ECB announcement day. Let's come off of that low. You could come back a little bit further, right around June 4th, right around 8 o'clock in the morning. But let's just simply use the low of that ECB session out here. Let's use that to help us determine our retracement levels. So if we're going to do that, let's come down from the low of that session. That is June 5th, 10 a.m., all the way to the high that's been put in so far. And that high is coming right here, 12 noon on June the 9th. And if we take a look at retracement levels, we're also going to, let me blow this up just a little bit for you. And what we'll see is price also had moved down to the 0.382 retracement. So on the 120-minute chart, when price broke below its support level, its market profile support level, it got down to, well, the actual low got down to 16,792. And 16,789 happens to be your dead cat bounce, your 0.382 retracement. So far, kind of and that's using a higher swing point, right? I mean, in essence, it's not really even a swing point out here. You'd have to say coming down to this little hammer candle down here at about 8 o'clock in the morning would be more likely what you would use. But we're just using that just simply because of an event that we remember. Because, you see, remember, I'm not going to remember that days from now or weeks from now for sure, but just to put things in perspective as far as where we're at. So this says the 0.618 retracement level. If, in fact, price breaks below 16,789, that'd be the next floor. That'd be the next assumed floor, and that's right around 16,727. Well, let's go take a look at the 240-minute chart. 240-minute chart tells us really a picture of the same thing. You're seeing selling pressure here, a break below the unfair low, which is 16,824. There's 2 time frames here that are saying, hey, selling pressure. If price gets above that area, that would say being short would be the wrong move, whereas if price stays below 16,824, being short on a shorter-term time frame would be the move. Now, where's price likely to move down to? Well, let's take a look at the daily chart here. If we take a look at the daily, this is the Dow futures. It's got a new market profile that's popped its head up here this morning, and that says 16,752 ought to be support. So you're trading right now at 16,810. That says you've got about another, 50 points or so before we can determine whether or not there's some type of change in trend that could be taking place. So expect that to be a level. If you were short, you'd want to be taking a look at potentially certainly tightening your stop, maybe even covering the trade right around that 16,752-ish range out there. And that is taking a look at the Dow. From the Dow, from the weekly standpoint, hey, the number is 16,401. That was a lot of time spent on the Dow futures. I guess I lost track of time. We come back. Let's go take a look at the ES minute. Let's take a look at the NQ. Let's do the same thing. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-markets here, let's see what we have going on. Synaptics, SYNA is the ticker symbol. Closed out at 66.52 last night. It's trading out at 79.50 out here. Let me see if I can... Synaptics to buy Renesas for $475 million out there. So it's getting a nice little pop here this morning. It's going to trade above its daily resistance level. Looks like 68, well above its daily resistance level. It's going to trade out, which is, by the way, at 68.87. Let's take a look at this. Looks like this may form a new A to B equals CD to the upside. We take a look at that pattern here. We're going to use as our A point. We're going to use we'll use the low right down here, the swing from May 7th. That's going to be our A point. Our B point is going to, in this case here, we're going to select the high that came in on May 29th, and the low swing point, the C point, is going to be June 3rd. So this would suggest that the 1-to-1 would complete right around 77.79, 81.30 more likely a target on this. And I mentioned that was trading right now at 78.90. So it's just headed to the 1-to-1.272 A to B equals CD at a minimum. We've also got Alta Salon, ULTA. I've only been in the store once, I believe. And my first impressions, of course, first impressions are lasting impressions, aren't they? My first impression was, how could a store have so many different hair products, so many different shampoos? Talk about a business with competition out there. In any event, I did find the product that I was looking for, but you don't really care about that. What you want to know is, hey, what's it doing there price-wise? Well, closed at 85.31. It's trading out at 95.65 as we speak right now. So on the daily basis, looks like we're seeing a change in trend out here. When I say a change in trend, if we take a look at this just from the time frame here of about April 9th, what we'll see is the unfair highs, the red horizontal lines on my screen. They've really acted as resistance lines, and today it's going to be gapping up above that area. Really been in a little bit of a sideways consolidation out here, with high of that consolidation being about $90. We'll say the high is 90, the low looks like a little hammer candle that was formed down here on May 29th. The low of that hammer, 83, so 83.50. We'll just call it about $7. So $7 on top of 90. 97 is where its measured move is. Where's it trading here right now? 95.73. So probably has a little bit more run, but does look like Alta Salon is certainly going to gap up this morning and is going to change its trend out there. Of course, you might say, hey, where could it really travel to? If we just simply take a look at retracements, and we go from the swing point high from March 20th down to the low of that hammer candle session. That's on May 29th out there. Your .382 retracement level, 92.94. I'd have to say 97.93. The .618 retracement is most likely where Alta Salon wants to head to. Let's see what else do we have moving on. Let's take a look at something moving to the downside. Not for any reason other than just to see what's moving the markets lower out here. 1620 was the close on Bank Corp Inc., Delaware. TBBK is the ticker symbol. It's right now trading out at $11. What the heck is behind that move? Maybe you don't want to have a ticker symbol that ends in BK. So let's pull this thing back. That's trading at 11.05. That is going to gap down. That's going to be below all kinds of support out here. Wow. Let's take a look. This thing has had some troubles. Take a look at this gap down back on the trading session for April 24th. So the question is this a exhaustion gap? And the answer to your question is no. This looks like it's only the second gap out here. Let's put this on a different time frame. Let's go take a look at a monthly chart. TBBK is the ticker symbol out here. So it's had a nice move off of the lows back in 2009. The actual low in this case came in December of 2008. But this morning here, you can see how it's acted. It's now going to be below its unfair low. Of course, this is a monthly chart we're looking at. But any close below 1620 for the month is not a positive thing. And that is on Bank Corp Inc. DEL, I'm assuming that stands for Delaware out there. Also to the downside, we've got Orexogen Therapeutics out here. It closed at 681. It's trading at 575 right now. Facebook closed at 65.77. It's pulled back to about 65.32. Not a big, huge deal out there. I did mention we would look at the ES Mini, and we'll have to do that after the market opens. But I will tell you the daily support level inside the ES Mini. Come on, populate, would you? Populate before we go to a breakout here. Looks like that's at about 1934 out here. Right now, it's traded at 1943. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading off 67 points, trading out at 16,879. S&P off 7.5 at 1943. Composite down 16 at 43.22. Russell 2000 leading the charge to the downside, off 0.5% right now, off 6 points. Trade at 1166.60. Sounds like a little devilish price to me. Synaptics leading the charge, the upside, up about $16, 24%. Alta Salon up $11, trading out at 96.02. Amazon up $4.65. Trading at 337. Infosys, INFY, up a couple of bucks, 4%. Montage Technologies, MONT, up nearly 10%. Up $1.94. Las Vegas Sands, a little rebound. I think yesterday it had traded low. I don't know how it ended the session, but it's up about 2% this morning. Melco Crown Entertainment up $1.25. H&R Block having a decent session here, up 4%, up $1.28. Sandisk up a buck, up 1%. To the downside, Bancorp Inc. DEL off 36%, down about $6. Boeing off $2.46 right now, a little under 2%. Baidu off $1.88, about 1% to the downside. Auxilium Pharmaceuticals off $1.78, that's down 8%. National Oilwell Varco, NOV, the ticker symbol, off $1.64. Tesla off $1.44. Aviv, BEAV, down $1.12 this morning. All right, let's go back and take a look at the, let's try to go finish off these 4 time frames here. Let's take a look at the ES Mini. So the ES Mini here, the S&P Futures, 120-minute chart, well below its unfair low. We can see that that level is at 1948. It's trading at 1943. If one was short on a shorter-term time frame and you see it close back above 1948, you might want to think about tightening your stops out there. And most certainly a close above 1951 you would not want to be long. That's using the 120-minute time frame. Let's use the 240-minute time frame as well. Looks like unfair low, the resistance or the support level, now resistance, now potential resistance. That's priced out at 1944. So 1944 using this time frame, it's either going to act as resistance now, or if you see price get above that area, that would have to make your sphincter muscle tighten up just a bit out there. At least it would if I were short the market, and I am not short the market here just yet. On the daily chart, I mentioned the daily chart here, support level at 1934. You really need to see the ES Mini crack that level to begin to really see a change in trend take place out here in the market. And, of course, on the weekly chart, it's got a long way to go before it would get back to its support area. That's at 1839. Otherwise, on a weekly time frame, it is still long and strong. And that is the ES Mini. Of course, if I take a look at the ES Mini, if we take a look at candlesticks out here, let me just put this, we'll pop the Rhodes Momentum Indicator system up on the screen out here. What you're going to see at this stage, not going to take much to create a bearish engulfing today. Why? Because of the 2 narrow-bodied candles that we had the last 2 sessions. Now, it does get a little bit more serious from a reversal signal. In the past, I've taken a look at the U of M pattern, University of Miami, even though I'm a University of Michigan fan out there, but the U of M Michigan logo doesn't facilitate what it is that I look for. The University of Miami logo does, and that's the U that forms that nice bottom. Here we've got the reversal of it. This would be the upper session here. We have a decent wide range, decent bar here on the trading session of June 6th. Two narrow-bodied bars to follow. And, in fact, if you get a close certainly below the open of the June 6th session, which, by the way, is at 1938.50, you'll then have the opposite of that University of Miami. You'll have to try to come up with that. I don't know, what is that, the Nebraska logo? I have to go. It really can't be an and because it's got to be the. And anyway, let me not just kind of babble there because it doesn't accomplish anything. Now, just because we see that potential reversal pattern, does that mean you run for the hills? No. Shoot, this got a long way to go just to work off its overbought condition. Take a look at the relative strength indicator. That's at the bottom portion of my chart out here right now. It's at 75.42. Anything over 70 happens to be a overbought condition. But remember, as long as it stays above this area here, that's just telling you what kind of additional tool, telling us what kind of buying strength there is inside of the marketplace. So that's the daily chart. That's what we're looking at out here. Let's go take a look at the NQ. Let's go see what its market profiles are signaling to us as well out here. Give me a moment. We'll pop that up on our screen. And again, let's look at all four time frames out here. Let's look at the 120, the 240, the daily, and the weekly charts out here. So on the 120-minute time frame, well, this is not good if you're a bear because it's the NASDAQ been leading things to the upside. And they're at the NASDAQ on the 120-minute time frame coming into the open here. We did see a close below its unfair low out here. That was at 37.79, but you're trading at 37.84, a rejection of that area. So the next area of resistance for the NASDAQ, if it can make its way all the way up to 37.94, another 10 points up. Folks, if it gets above 37.94, do not be short. Certainly do not be short the NASDAQ out there. I'd also have to say do not be short the market because it will lift all tides out there. That's what the 120-minute time frame is showing. On the 240, never really broke down. Price only got down to the point of control where the largest number of transactions, the congestion in the market is taking place. For those of you listening on your radio and you're driving, you know what congestion is all about on your way into the office. Well, in a stock chart here, we can also identify congestive areas, and that is at 37.76, and that area is what really held right now as a support-ish type level. Real support, though, being 37.68. Real resistance on the 240-minute chart being 37.91. A close above 37.91. Real bullish. A close below 37.68 says, hey, on a shorter-term time frame, you may not want to be long the market out here. Daily-wise, we take a look at the daily profile, one that just formed here as we speak this morning. And I've got our man John Logan checking into this for me because what I have noticed here over the course of the last several days, and you'll notice that I've primarily changed the charts. I still use 3 charting packages. All are great tools out there, but you'll notice me using the eSignal platform more often out here, and then I've taken advantage of the market profiles for you. What I have noticed is that the morning sessions when we open, all of a sudden I see a new market profile that pops up on my screen. So I don't know if that's real or not. So during the break, I sent a message to John, and he and his team are going to go check that out for me. They may even be listening right now, and if you are, guys, good morning to you, and thanks for checking this out for myself and all the listeners out here. But at this stage, let's go with the information that we've got, which is that resistance is at the 37.96 level out here, and support on the daily basis, 37.57. So until you see a break of that daily low out there, what you're trying to do is call a top. And if you are, God bless you, no problem. Just make sure you have a bracketed order out there. Make sure you've got an exit strategy. Make sure you've got your stops in place, your stop and your exit out there. So the NASDAQ looking relatively strong. Let's take a look at the Russell 2000. I can do that. Remember, I've got a 10-minute delay on this, so the price is not going to be exact, but it's going to help you understand where your levels of support and resistance are inside of the Russell 2000. So as this populates, we'll say quickly take a look at the 120-minute time frame chart. It's level. It's unfair low. It's level of support, which it has broken here during the last 120-minute session. It's at 1162.87. Gets back above that area, and I would say really what you want to see it get it back above is 1164. But look, if it gets in and closes above 1162, it will have rejected lows out there. And then, of course, nice long and strong would be a close back above 1171.80 or so out here. That's its resistance area. However, right now, on the 120-minute time frame, 1162.87 should be resistance. Again, getting back inside there, your sphincter muscle ought to tighten up if you are short. If we take a look at the 240-minute chart out here, 240-minute chart says, hey, not so fast on the trigger out here because price has not gotten down or broken the unfair low. That's at 1155.62. That's one I'd be really focused on and paying attention to. So we could see just a bit of a trading range out here while the overbought condition works its way off inside of the markets. Now, inside the Russell 2000, it's not overbought. Unlike the ES Mini, unlike the NASDAQ, unlike the Dow futures out there, which are in overbought condition, that is not the case inside the Russell 2000. It's kind of mid-stroke. Its RSI reading, its 14 period, is at 53.72 as we speak right now. Of course, that's on the 240-minute time frame. On the daily time frame here, let's pop that up on the screen. The daily time frame shows your 14-period relative strength indicator at 61.50, and that is most certainly not a overbought condition, nor oversold out there, just kind of somewhat neutral. It says 1149 on the daily chart is the new daily profile, and I'm sure by the end of the day, maybe even during the next hour or so, I'll know whether or not that is a real profile for us to be paying attention to. That'll help us in the ensuing days out here. On a weekly basis, we take a look at where price is at. Price is bumping its head into the resistance area. Resistance is 1188.90. If the Russell 2000, the futures contract, which is we're looking at here, if it can close above 1188.90, everything will be in concert to the upside, and the summer rally will continue, folks, and it's going to continue for a good long period of time to come out here. At least that is Stevie's thoughts on that. Of course, any pressure that we've seen in the market here this morning, that was accompanied by nothing more than the euro Japanese yen. If we take a look at the daily chart out here, we got that 0.786 Gartley buy pattern that had formed back on the trading session of May 29th out there. That low so far has held. That low is 137.966 out here. It hasn't been tested. No, it has. I take that back. 137.959. That's a good deal. 959 out there. And so that level's been tested. That's important. It is important for us to be watching this because a break of that low, and it kind of creates a trouble, double trouble, real trouble out here. Here's where you can start to say, now you got to start really taking a look at the potential bearish outcome, or at least directional. Remember, this is a directional indicator. It's not a tick for tick. I wish there was a tick for tick equivalent because we could make a fortune, and it is not that at all. But it is a directional indicator. If this level breaks, what we know about a Gartley pattern, a 0.786 Gartley pattern, is when they fail, they turn into butterflies out there. And the butterfly on this pattern out here, boy, that would take price down to the 134.16 level, and right around 134.16, it probably begins to test the rising price channel. This is a nice rising price channel taking us all the way back into July of 2012 out here. Of course, we made a nice low in July of 2012, and take a look at what the euro yen did as well out here. So on the daily chart, we know what we're looking at here. Now, I do expect that this level is going to hold. Of course, you might say, well, why would you say that? Well, because I would say that for this reason here. Let me go over and flip tabs here. So we take a look at that. It's because of the hammer candle. That hammer candle that formed all the way down here back at 5 a.m. That was on May 29th out here. So what we've seen now is a test of a hammer candle. If we use the Chapman Wave peak and trough counter that I've created out here, let me go ahead and I'll go ahead and start that on my screen here. If we take the high out here, that high in this 120-minute time frame, that's coming in at 2100 hours, so that's 9 o'clock in the evening. That's on June 8th. So I'm going to use that. And from here, I've got this little counter. It counts its way up or down. In this case here, we're counting down. What we will see here is, let me just make sure that this is the third trough, because when it's equal in pips, it kind of confuses the system. So 139, 256. What do we have here? 256. So that's really not a third. That's the second level. So I just got to subtract one. There's the fourth level, fifth, sixth. So we're at, A, B, C, D, E, F. So it made that little F trough out here as it was testing the hammer candle out here. As long as that hammer candle, that's a strong area where the bulls are rushing in. You can see you're in overbought condition. At a minimum, we want to see a bounce out of here, but that bounce could turn into something more. And if it turns into something more, well, then the sell-off this morning is nothing more than another buying opportunity inside of the marketplace. So that's what's going on these shorter-term charts out there and trying to itch and stitch it all together. Now, let's go take a look at Goldilocks. Let's look at silver. Let's go see what they're doing here. Let me change over to a different tab. Let's go take a look at, that's not the right tab. Let's change over to this tab here. This way we can take a look at the market profiles. Let's look at Goldilocks. It's trading up a couple of bucks right now. Again, because of the way this is all stitched together, I've got a little bit of a delay here. Nonetheless, as we take a look at gold on the daily basis here, it has changed its trend. No question about it. It has changed its trend out here. Now the question is going to be, is it just a retracement for another leg lower? And I don't know the answer to that question. I say it's changed its trend because it's above 1256.60. That's its unfair high. That's its resistance level, and it is up above that. And so long as 1245.70 holds, then we will have seen a change in trend underway. Now, if we just take a look at retracements, let's go do that. Let's take a look at retracements from whatever we want to take a, let's use a real one. Let's use a real swing point. To me, that looks like coming back here on my chart, May 5th high. That May 5th high is 1316. So that's going to be our, no, come on. Why don't you grab that? There we go. That's going to be where we're going to retrace from down to the low that came in this session. Here's a little doji candle on June the 3rd. As we take a look at that, what we will see is that the 0.382 retracement level just overhead. So it hasn't even made the dead cat bounce out there. 1269 is the numbers. I believe that's just coincidental, I'm sure. Our man Z in the Den is looking for two closes above 1269 to tell him that the trend in Goldilocks has changed. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 72 points right now. S&P down 6. Composite off 7. Russell down 4 points out here. Apple up 18 cents, trading out at 94.44. Let's go check in on the sectors within, not the sectors, the ETFs, the ETF indices out here. Let's go see what we've got going on. Let's take a look at the Qs here. Kind of interesting. The Qs here. Now out of, let's see, 1, 2, 3, 4, 5. 5 out of the last 6 sessions have been with light volume up here at the top, which is a real indication of a short-term top in the market. Could be a long-term top, but because of other factors, I don't think so. Looks like complete the 1.272 level, 93.48. Now, what's really interesting about this, these light volume bars out here up at the highs, they're really an indication of a market that wants to top, but it has not cracked. Has not cracked. And instead what we're seeing here is a sideways movement, which in the market, we could see a sideways movement here for quite a while. And if we do that, because if you take a look at the bottom, not the very bottom of the chart, the very bottom of the chart is volume, but if you take a look at kind of the midsection up here, that's the 14-period relative strength indicator. You can see the market's overbought, OB. Not OB1, that says OB out here. It's overbought. And the most bullish way in overbought condition, or oversold, in this case here, because the market's moving higher, we're looking at an overbought condition. The most bullish thing is for the market to move sideways or create some kind of a trading range out there. And trust me, the Dow we've seen the Dow have large trading ranges, right? If we go and take a look at the index futures here for the Dow, you can see the 600-point consolidation range that it's traveled in. It was in a 600-point consolidation range between February 14th of 2014 and May 22nd out there. So for a period of months, and that was a 600-point consolidation range. By the way, broke its consolidation. It says a measured move should be in the 17,000 range, 17,180 to complete the 1 to 1 A to B equals CD to the upside. So and with the number of up days that the market has had here, you have to expect a market that pulls back out there. But if we take a look at, let's go back and take a look at the ETF structure out here, volume-wise so far this morning, about 3.8 million shares. Yesterday was 20 million shares. So in the first 26 minutes of trading, fairly decent volume out there. Let me take a look at the New York Stock Exchange. I don't have the oscillators. They're still above zero. That much I know. The summation index still pointed up. Let me get rid of the 1-to-1 A to B equals CD inside the NYSE takes you up to a price of 10,970. I don't see anything here of real significance. However, inside of the New York Stock Exchange, I believe the number today, I did write this one down this time, 749 is the number. Let's go check in, see what we've got. We got net declining issues of minus 12. Net declining, why would I have to say minus? I don't. But net declining issues of 1268. At the end of the day, the end of today's trading session, if that number is 749 or more, that'll tell us that the bears have taken control of the market. And as far as where they're going to be able to push the market to, well, we'll just have to look for natural areas of support. We'll take a look at retracement levels as well. And to me, even though it says the bears have control, I still believe it's more of a neutral position than a short position, at least from a longer-term trading time frame out there. But the market can change my mind. It just has to give me those signals. And even with the Dow being down 76 points, those are not the signals. Even with the S&P being down 7, that is not the signal out here. In fact, let's go check in on the VIX just before we close here, because let's see what that is trading at, the VIX index. Oh, come on. It's got to be right in front of me. Where is it? There we go. VIX index, 1149, well below the 50-day exponential moving average. Folks, thanks for joining me on Wonderful Wednesday. Have a wonderful day. I look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.